Okay, I think we're there or thereabouts. So let's get started because, like I say, I do appreciate you being here on time. So thank you. Um, Welcome. Thanks very much for joining me on this Wednesday afternoon. Nearly forgot what day it was there. Wednesday afternoon to talk about property. That's obviously one of my favourite subjects. So without further ado, let's get started. This is a Sourced Network production. My name is Chris Kirkwood. I am the franchise director for Sourced Franchise. So first of all, as always, why am I the right person to talk to you about property? What have I done? What's my credibility? Do I make sense? And should you listen to what I say? Well, of course, I would say yes. And hopefully the majority of our franchisees would say yes as well. So like I say, I'm the franchise director. I've founded, run and grown multiple businesses in property, out of property, different sectors. I tend to have built businesses from zero, which is one of my favorite things to do. You have absolutely zero to start off with, and then you create something, and you create this machine that is plowing out money for you every single month, and also building its own value, very similar to property. And I love doing stuff like that. I've done it before in property, but property is absolutely 100% my focus right now. In property, I've been involved in deals from £55,000 up to 150 million. So £55,000 was a small project that I bought in Salford. 55 grand was the purchase price. Owned that property for about 3 years and sold it 3 years later for £130,000. And we did some refurbishment to that property, but we spent no more than 5 grand on that property. I remember that one vividly. And then up to 150 million. So we've got a development going on in Manchester at the moment called Regent Plaza. I'm involved in that development, and the GDV of that development is 150 million pounds. I've executed lots of different strategies, and when I made a very common mistake. I'm sure a lot of you can empathize with this, in that when I first started off in property, I just bought a property. That's pretty much what I did. That was my strategy. I bought a property and just thought that, okay, I'm a landlord now, so I bought a property. Shall I go and buy an Aston Martin or a Ferrari? What am I going to do? And then you look at the bank statements 3 or 4 months later, and you realise that you're only making £100 from this property per month, and it doesn't marry up. Everybody invests in property. A lot of people make a lot of money out of property, but I'm making £100 a month. This is not right. And at that point, I realised that I needed to educate myself, and I specifically, we're not going to get into this in this webinar, but this is a big thing of mine, in that I specifically needed to educate myself when it came to strategies, structures, and finance. They're the 3 things that I absolutely took a 12, 18 months into educating and doing everything that I possibly could in order to give me that kind of that information, which then allowed me to structure deals and find deals that other people couldn't or didn't know how to work out. So I did that for myself, and then I came on board with Sourced, and now what I do with Sourced as the director of the franchise is I help other people do exactly the same thing. We have a support team here at Sourced, and that support team, their only function, their MO is to make the franchisees more successful. And they do that by structuring deals, thinking creatively, coming up with solutions, helping project manage, whatever it takes to get these deals through. That's what the support team do. And that's because of the experience and the stuff that I've done in property, and where I see the real benefit of a company like Sourced helping people make money out of property. So that's me. Let's also talk just very, very briefly about the etiquette, webinar etiquette, if we may. So you've got a couple of options in your menu bar. You've got an option of Q&A, and you've also got an option of chat. So if you have any questions at any point during the webinar, please put them in the Q&A section. If you put them in the Q&A section, I can tick them off as I answer them, so I know that I've answered your questions. If you put it in chat, it's basically just like Twitter. It's just a fire hose of text. So I might miss some questions if you put it in chat. So please put any questions that you find in Q&A. Much appreciated. So what have Sourced done so far? As on any webinar, we'll probably get a number of people who have been following Sourced. Sorry, I just got something from the chat box, which I was reading. And just to answer that very quickly, This is going to be recorded, yes, and the recording is sent out to everybody that's registered. So some people will have been following Sourced for a number of months, or perhaps even years, and some people will have just heard about us. So let's just very briefly go through a bit of history for Sourced. So initially, the concept of Sourced was thought of in January 2017 by our managing director, Stephen Moss. He came up with the idea of it, and then he spent the next few months mapping out how it was going to work and putting all the right regulation and limitations in place. And in September 2017, the franchise model actually was launched to the public. We were FCA approved as Sourced Capital in August 2018. And by October 2018, we had 40 franchisees. So fairly good growth actually in 1 year for a new franchise model. In February 2019, our development in Regent Plaza was launched, the £150 million that I was talking about. And Sourced was registered for ISA and pension funding for Sourced Capital in January 2020. Sourced Care was launched in October 2020, which is another arm of the business. We're not really going to get into that too much today, but it is a facility that our franchisees have. And then by November 2020, we hit 100 franchisees, and summer 2021. So we're not quite there yet, but we've got a phone app in development right now. So I've just got a question from Olayumi. I'm actually going to answer that question later on. So I'll get to that. I'm not going to answer it now. I'll answer it later on. So there's a phone app is going to be launched, and initially that phone app is going to show investors the deals that we find that are available for those investors to buy. But then moving on to stage 2, stage 3, stage 4 of the phone app, there's going to be more and more functionality built into that phone app. So this is just the start of something very, very big. So if you've seen our website, you'll know that we've got the 5 different sections of the business. Essentially the business is built around 2 sections. So the franchise and Sourced Capital. The franchise arm of the business is obviously where we bring people into property. We help educate them in different ways of making money out of property. And most importantly, we support them all the way through that process. You know, this is not a training company who is all about bums on seats. And as soon as you come in and you get trained for your day or weekend or whatever it is, and you're out the door and they literally can't remember your name as soon as you're out the door. We've got an ongoing relationship whereby the training that we put in place is much more transparent, is much more open, because we have an ongoing relationship whereby we want you to put that training into practice. We don't just fill people full of hot air and then shove them out the door. We are all about making sure that you implement. It's all about implementation and training, not just the information. And then we've got Sourced Capital, and Sourced Capital, when you find a deal, can fund your deal. So Sourced Capital can fund up to 100% of the purchase price and 100% of the development costs for the right kind of deal. And still, I am the only person that is on the Sourced website. So that's me on the right-hand side, doing a bit of training in our old office. But we've got 3 other parts of our business as well. So we've got the developments, which is you can see all of our developments that we're doing from HQ in that section of the website, because not only do we teach people about property, which, you know, we've got the experience to teach people about property, but we are still doing property. We are still out there. We are still finding properties. We are still converting properties. We are still building that side of the business as well, because we believe just as much as you guys do, because you're here, that property is the right place to put your money. We've got Sourced Care, which is looking at working with the care sector in order to find these long-term rental contracts and the benefits of those long-term rental contracts, either through housing associations or care providers. And then we've got the property side of our website, and there's a huge amount of resources in the property side of our website. Webinars, podcasts, downloads, white papers, all kinds of stuff in that property side, as well as the properties that the franchisees find at the moment, until they're finally moved over to the app. So lots of things going on, but essentially Sourced is all about franchise and capital. So this title of this webinar is how to make £200,000 from property in 3 steps. And that's an important title to start off with, 3 steps, right? Because What a lot of people think is that they're going to come into property, they've got a little bit of money in their pocket, and the first deal they're going to find is going to make them £200,000, £300,000, £400,000 even. Whichever way you look at it, it's going to make them a lot of money. Now, I am not at all going to deny that that doesn't happen. Okay, that absolutely does happen, where people can make an awful lot of money out of property in the first ever deal that they've done. And I can show you examples of how some of our franchisees have done exactly that. Now, when you're first getting into property, and what I want to talk about today is I want to talk about increasing your likelihood of making £200,000, because there's a way that you can go about it in which you increase your chances of making £200,000. There's a slightly different way of going about it, which you actually decrease your chance of making £200,000. But you might not be aware of that from setting out and starting up yourself. And the reason that we know about this, the reason that we're experienced in telling you about this kind of thing, is because we've been there, we've done it, and we've not only done it with property, but we've also done it with other businesses as well. And that's one of the things that a lot of people forget. A lot of people forget that you are building a brand new business. Now, that business just happens to be in property, but it is a brand new business. And so you have to think about it in terms of business metrics and not just property metrics. So you have to be thinking about efficiencies, and you have to be thinking about probabilities. Because what's the point in getting into something and doing it in a way which reduces your chances of being successful? And that's what we're all about. We're all about the long-term success, not just about filling you up full of hot air that you could make £200,000 in one transaction. So this is, a totally flippant slide that I've put on here, just to sort of emphasize that when people first come into property, this is the kind of thing that they're looking at. They're thinking, I want to build something, I want to build a new build property, and I know that properties like this will sell for, I don't know, I've got no idea actually. I don't even know where this is, but let's say 20 million. Property like this is going to sell for 20 million, but I know to build a property like this is only going to cost me 10 million. So I've got a 50% profit margin, and I'm going to make 10 million quid on my first deal. Now, is that possible? Absolutely, it's possible. Is it likely? Then I'm going to have to say no, it isn't likely. This then becomes something that you might be whimsical, and you might be thinking about that shiny penny syndrome, and you might look at that big mansion to build first, and you think, that's the kind of thing that I want to do. But then you rein it back in, and you think, actually, come on, let's think about this more sensibly. Instead of building one big mansion, what I should do is I should build 100 flats, because building 100 flats is more sensible. There are more buyers for flats out there than there are for mansions. So let's focus on the flats first, and let's make 10 million that way instead of making it another way. Now, I can't argue with that logic. However, the likelihood of this kind of thing coming off again for your first deal is pretty slim, unless you've got the backing and the support of a pretty slick and well-formed team. Now, we have helped a franchisee do something similar to this. However, the purpose of this is to get you to £200,000, and I would say that there are far more efficient and probable ways of getting you to £200,000 rather than looking for a unicorn like this kind of deal. Now, I'm fully aware that this is not the most glamorous slide in the world, and I use this. I genuinely use this. And if there are any franchisees on, which I haven't actually looked for, which I usually do, but I was a little bit late in setting this up today, but I usually look for franchisees. But if there's anybody on here that is one of my franchisees, they'll be able to attest that I use this slide in every single training session that I do, whether we're talking about new build developments, commercial conversions, lease options, HMO, rent to rent, anything. I use this slide because it's not the best, it's not the most glamorous, but it shows what I want it to show perfectly. And this is your pipeline of properties. Now, on the grey section here, on the left-hand side, in fact, let me talk you through the numbers on the left first. So the numbers on the left are the months of the year. So if you start on this bottom line right here, and then that line there is month 1, and then month 2, month 3, month 4. And on the left-hand side is where you should start off in property. This is my argument. And these are small deals. Now, in most cases, these deals are to trade on. So you find a deal, you find an investor, you put them together, you make 3 or 4 grand. Fairly straightforward. So you can find these deals fairly regularly. They could be any kind of deal, and you're making a small amount of money. So in 12 months, you can get through that many deals because all you're doing is selling 1 deal a month. That's all I put in here, without selling anything in the first month, because you're just getting set up at that point. So from month 2 onwards, you're selling 1 deal a month. Now, if you do that, you're going to start to create an excess of cash. You're going to start to build your own pot up, and your pot can then be moved over into doing bigger deals. So these are flips that, instead of selling on to an investor, you can do yourself. And you can overlap these flips, and you can get a couple of them working at the same time, and you might get 4 or 5 done in a 12-month period. But again, what that's doing is you're putting a small amount of money in, but you're taking a larger amount of money out, so that you are again building that pot of cash. And that pot of cash that you're building will then go into this bigger deal on the right-hand side, the blue section, in which it might take 12 months for you to get that big deal done. And it might require a lot more money than a flip or a traded deal. But then the profit margin from that bigger deal is also going to be significant, and it is going to be the kind of profit margin that you're looking for. So that's how that slide fits together. And if you work through the metrics of that slide and the amount of money that you can make from that slide and so on, the traded deals I've put through here as £3,000, which is a conservative amount to charge for a traded deal. You know, we have franchisees who are charging £4,000, £5,000, £6,000, £8,000, £9,000, £10,000 for trading a deal on, but I'm being very, very conservative. So £3,000 per deal. From the flips side, moving to the next section along, again, being very conservative of saying that a profit margin for a flip is going to be from £20,000 upwards. And then far on the right-hand side is the conversion deal, or the bigger deal, which again, very conservative, saying that that's going to be £80,000 worth of profit. I have been very conservative. If anybody's in property, please jump on and let me know that, back me up on how conservative these numbers are. But what that then does is, in 12 months, over a 12-month period, that pushes you over the threshold of £200,000. And the important thing is, you haven't done anything that's completely out of the ordinary. You haven't reinvented the wheel. You've just followed a path where you're building relationships with estate agents, you're finding these deals, and you're executing on these deals to make money. And over a 12-month period, your turnover can get to £200,000 in a very conservative way. Now, in most parts of the country, a profit per flip is going to be way higher than £20,000. A profit per conversion is going to be massive in comparison to £80,000. But the point is, if you structure yourself conservatively and you know exactly what you have to do in order to reach that £200,000, it gives you a fighting chance of executing on that plan. So step number 1. Now, we chose trading deals on the slide that I showed you previously. But it doesn't have to be trading deals. It's just about cash flow. So long as you're making regular cash flow, in which that cash flow is creating an excess that you can put into a pot, that is the only thing that you need to do. And in property, you don't just have to trade deals on in order to get hold of that cash flow. So what you're doing with that cash flow is you're looking after your lifestyle. You're making sure that you've got enough cash to survive, to pay your bills, to keep doing your thing week after week after week. But because you're putting that time into property, you're constantly building your contacts. And to be perfectly transparent with you, I've met a lot of people in property, but I've still got people that I talk to who I've met in the first week that I was ever involved in property. I've still got those people because I happened to get on with them very well. I can help them and they can help me. And so we've stayed in touch. So building your contacts is something that is never going to be a waste of time. And the point of that is that, I'm doing much bigger deals now, and those guys have ramped up as well. And that we can still work together. We can still do things that are going to help each other out. As well as looking after your lifestyle, you're growing your investment pot. And so long as you're growing your investment pot, what you're doing is you're setting yourself for the next stage of growing and going into those bigger deals. And those bigger deals for stage 2 would be doing the flips or looking after the flips. So because we're looking at cash flow, how many different ways can you create cash flow from property? So I thought I'd talk you through 5 of the ways that we help our franchisees with. So number 1, trading deals. So exactly like I've just talked about, you find a deal, you find an investor, you sell that deal to an investor, you make a figure for selling that deal to an investor. We've used the example of £3,000, but it can be significantly more. Lease options and taking advantage of lease options by finding distressed sellers is something else that you can do, because these lease options give you control over a property that mean that you can then make a regular cash flow from that property. We've got rent to rent as well. So for those of you that are familiar with rent to rent, similar sort of structure to lease options. However, there's no option to purchase at the back end. But rent to rent, you're renting a property from somebody, and then you're using the property for a different purpose in most cases to then make more money from the rental income, and you make that margin. So if you're renting it from somebody, you'll pay them £1,000 a month, but you'll rent it out for £3,000 a month. After all the bills are paid and you've taken care of all of your liabilities, you might be making £1,000, £1,200 per month from controlling that property. New build sales. Now, we at Sourced have got quite a few new build projects, and we allow our franchisees to sell those properties. But you can go out there, you can negotiate with people that are building new properties, and you can do exactly the same. Normally, you'll get between 2, 3 or 4% for a new build sale. We give our franchisees 8% because obviously we're here for their benefit, to help them make as much cash flow as possible. And then investing into Source Capital. So Source Capital will pay its investors back a set interest rate. And for our franchisees, again, if they introduce somebody to Source Capital, they get commission based on introducing that person to Source Capital. So these are 5 ways that our franchisees have got access to make cash flow out of property. And we have examples throughout our franchise network of people that have done exactly that, have used one of these methods and executed that method and made money out of it on a regular basis. So what's the other side of this? How do we help the franchisees in terms of the investors? Because we talked about the property, and what they need to do is go out there and find the property, and then they need to find the investor. And that's one of the things that a lot of people seem to struggle with. Going out there, having conversations with investors, and making sure that the investor is bought into that person for finding property deals for them. Now, we actually have specific training courses for our franchisees on how to build relationships and how to talk to investors to get them to a position of wanting to buy a property from them. But this is what we do to attract investors into our world. So we have a number of things that we put out there at HQ, webinars like this one. We do podcasts, we do downloads, we are in the local press, we do videos, we do lots of things in order to attract the attention of investors. And those investors see that content, and then they come to us and they register with us. At that point, when they're registered, they'll get a series of emails, and those emails will be, again, educating them, informing them, telling them about things that are happening in the property world, basically making them more informed investors. And one of our franchisees can advertise a property deal out to these investors. So we'll drop that property deal in with the other content that we're putting out there. So out of that pot of investors, we'll then create people that have, not create people, but we'll create a list of people who have expressed an interest in that property. And we will hand that over to the franchisee. And that is the franchisee in red there. So the franchisee receives this list of people, and then it is the franchisee's responsibility to then have a conversation with those people about the property. And when the franchisees had the conversation with those people about the property, they'll get sorted into 2 different categories. They'll get sorted into people who are very serious, have got the money, have got the know-how, they can get that deal done, and people that haven't, aren't quite there yet. They might not have the money, they might not have the know-how, they need to do something else. And so what happens is that the people that are on the not quite there yet, they'll get put onto the franchisee's email list. But the guys that are ready right now, they will continue the conversation with the franchisee to sell that deal on, and then one of them will buy it, and then the franchisee and that investor make money off that mutual relationship. So out of that entire process, we've got these investors that are qualified twice, because they've qualified once to get into our main mailing list and qualified once to click through on the email to then get sent through to the franchisee. So we do that hard work, that legwork, in order to get these people through and in front of the franchisee for the franchisee to then convert and make some money out of. So that's step one, and they're the options that the franchisee has for step one. Step two, when we're looking to move up into larger deals that have more profit, and the example that we used was flips. So first of all, what they're going to be doing is they're going to be investing in themselves from the pot that they've grown from executing step one. They can now move on to step two, and they can put some money into themselves to make more profit. Now, the purpose of this isn't to, just spend that pot and then have nothing to show for it. The purpose of this is to spend that pot in order to grow the pot even further, because you want to get into the bigger deals. So continuing to grow the pot, and also building their knowledge of structures, strategies, project management, different things that can go wrong, what happens with utilities, building projects, having access to much more complicated deals, which means that they are building their knowledge in order to go through into step three. And again, we have a support team that helps our franchisees do this. So we've got people that will go out, they will assess refurbs with you, they will work through project management, they will help you as much as they possibly can, put your plan together in order to make sure that property that you're looking at gets executed. So now we're on the orange stage. We've gone through the grey stage. We're now on the orange stage. And again, all we're trying to achieve in this orange stage is building that pot to get into stage three. And then here we are, stage three, getting into the meaty deals. And this is where the profit can really, really escalate, because there are the ceiling prices of these kind of deals is far less structured than it is if you're just doing a flip on one property. Now, by this stage, by the time you get to this point, you should have a decent sized network behind you of people who can help you out, that can give you advice, that can, step in and make sure that you're doing the right thing, as well as everything that we do at Sourced. Oops. So following those three steps will get you through to the position of this kind of profit level. And like I said, I know I keep banging on about this, but these numbers are very, very conservative. To give you an example, we've got a number of conversions going on at the moment. I think the lowest profit level on any of those conversions is something like £400,000. So, £80,000 is very, very conservative. But what I was thinking of for a conversion like that would be something like a shop with a flat above it. And if you were going to convert all of that. So the profit level for that might be something closer to £80,000. But again, it gets you over that threshold of £200,000, which is the conversation that we're having today. Now, this is what I generally see in year one, when people are allowed to, come into property and make decisions for themselves. And as you can see, they've not tried to trade, they've not tried to flip, but what they're trying for is a conversion. And when they've been trying for that conversion, they've put, in general sort of feedback would be that they've put all of their eggs in one basket. They've looked at one thing, they've been convinced it was going to come off, and something has stopped that deal going ahead. Could it be legals? Could it be the vendor has pulled out? Any number of things can happen in which it'll stop them going ahead on that deal. And all of a sudden, their profit or their total turnover for the year has gone from a predicted £80,000 to zero, because they haven't looked after their cash flow. They haven't looked after building their pot. They haven't built that machine properly, which then throws out money on a regular basis. And that's why one of the most impressive traits I see from people that come into property is that discipline. It's that discipline of building the business properly. Instead of just being overwhelmed with the ability to convert an old mill building into flats, they've built their business properly. So their business is taking care of itself, that it's functional, it's trading, and then it produces the big results for you when you're ready for them. Not that you're forcing it to happen when you're not ready for it, because any number of things can happen at that point. But in general terms, this is what we sit down and talk about with every single one of our franchisees that comes on board. We give them a white document at the very beginning, which is the 12-month planner. And that 12-month planner sets out where they want to be in 12 months' time. And then the support team, the relevant support person, will sit down with them and they'll work out that plan. They'll work out that plan that franchisee then has to go and execute. Because if you look at that plan and you focus on your cash flow, then you can see where you're going to be if you continue to put that discipline into place for a long period of time. And if you don't put that discipline into place and you're not looking after your cash flow and you're not building up properly, then this kind of situation that's on the screen now is far more likely to happen. So at that point, I've got a couple of questions. So I'm just going to jump over to the Q&A box. What's the reality of finding 5 flips and 1 conversion during the first 12 months as a franchisee? Well, you know what, Rod? That completely depends on you. It depends on you, how much time you spend on trading with us, and how much time you put into finding those properties. Have franchisees done it? Yep, absolutely. This is a really competitive market at the minute, and actually, I was looking at this yesterday. Very competitive market at the moment, and I hear from a lot of people outside of Source that you can't find flips. There's no such thing as a flip at the minute. Flips just don't exist. Properties are moving off the market too quickly. Whereas the last 3 deals that have come through Source Capital have been flips, all found by our franchisees in their local areas, flips that they've required funding for. So, you know, absolutely 100% accessible and possible at the moment. Do you have any stats on what percentage of members / franchisees have done at least 1 development with you and how long it takes? Jeff, we absolutely would have that kind of statistic, but it's irrelevant. Let's be completely honest, because every franchisee that joins us for a different reason, with a different situation and a different circumstance. So what we would do, I don't know whether you've already talked to Sam, but we would have a conversation with Sam, find out about your situation, and then he could actually absolutely put you in touch with a franchisee that's been there from a similar situation to you and, you know, made it happen, because that's what's relevant to you. It's relevant to you because that's the same situation as you. So that's a sensible way of moving forward. Oops, just got one more question. Sorry, just came in the last second. Oh yeah, you're welcome, Jeff, no problem. So creating your financial freedom. So what we provide at Sourced is we provide leads, we provide training, we provide a fabulous network of property professionals. We provide ongoing support, our bespoke, not only the CRM, but the bespoke software, because we've got the app now, and we've got the funding facility. Now, just imagine that for a second, right? We've got you property leads, and we've got you investor leads. We've got you the training for how to put that stuff into practice. We've got the people that help you, not only from within Sourced, but also from within the franchise network. We've got a professional who is on hand constantly, their only purpose is to help you become successful. We've got the technical stuff in the background that's working to help us achieve that, and we could fund your project. I mean, that's a very, 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 very powerful combination. Can I arrange a call with Sam? Yeah, absolutely, Greg. Just in fact, I'm just going to write your name down and I'll sort something out for you. Just got another couple of Q&As I'm going to jump onto now. Is it feasible for investors not based in the UK? Yeah, it is. Again, have a conversation with Sam. We've got somebody who is in Dubai who owns a franchise and is doing it in the UK. The limitation is that we're only here to purchase UK property. So that is a limitation. But I mean, there's plenty of them going around, so I don't think that that's going to be too much of a problem. But we do have other people that are doing exactly the same thing, Stephen. What do you say about deals in London, lease options and others? I think deals in London are just as viable as deals everywhere else, to be perfectly honest with you. Could I arrange a call? Yeah, absolutely, guys. So Esther, Greg and Ian. Let me just write your names down. Greg. Apologies for everybody else. Okay. I'll just get rid of these questions to make sure that I'm keeping up to date with everything. I'll tell you what I'm going to do, guys. I don't want to miss anybody, so I'll give you Sam's email address at the end. Okay, so you can get in touch with Sam directly. So that's what we provide at Sourced. We've got any number of franchisees who have been through the funding journey with Source Capital in order to get their deal funded. Do we need our own deposit to raise funds? So that's an excellent question, Hazel. Do you need your own deposit to raise funds? So as you know, if you go through a mortgage company, for instance, if you borrow, you would be able to borrow 75% in most cases for investment properties, 75% of the value of the property in order to fund it. So in general terms, you need to find 25% yourself. With Source Capital, we calculate it a little bit differently. So we calculate it based on the GDV. So we would say that you need 70%, you can borrow up to 70% of the GDV. But in terms of policies that we have in place as to when you can borrow 70% or when you might not be able to borrow 70%, it completely depends on the deal. We have to look at the deal from our investors' point of view. Because we're a peer-to-peer platform, what we do is we borrow money from individuals, and then we fund your deal by collecting all of that money together to fund your deal. So we know the kind of questions, we know the kind of deals that these guys are looking for, and in general terms, they'll go up to no higher than 70% of the GDV. But in terms of the risk, it depends on the deal itself. So what we will do, though, is our support team would help you through that process. They'd make sure that the property or the project was de-risked as much as possible, and then we'd present it to capital, and then we'd see what capital says. But again, out of the 3 flips that were the last properties that were presented to Source Capital, one of them was 100% funding for the purchase and 100% funding for the refurbishment as well. So do deals like that exist? Absolutely, 100% they do. How do you find out about deals like that? You come to the training, because only on the training will you understand where those deals live and how you find them. So we have over 100,000 investors on our database. And can't actually see what that screen says at the top, but I'm going to imagine that this is about the leads that we generate. So leads that we generate go straight into the CRM system. They could be commercial leads, HMO leads, planning leads, lots of different types of property strategies that we generate the leads for, that then come into the CRM system for you to take advantage of. So the sensible thing to do is to make contact on the day that you get the lead, and these leads, these opportunities are very hot. So it's completely down to you from that point on. However, we do have a training course called Funding and Investors that helps you understand how you should manage those conversations. So like I said, we can fund up to 100% of the purchase price and the build costs. And if you've got a deal that's got a great margin, you're far more likely to get 100% of the purchase price and the build cost. If your margins are very tight, then we might ask for a contribution from you. But if you don't have a contribution to put into that project, what we can then do is we can then say to the support team, look, we need £100,000 to put into this project, and the franchisee doesn't have it. Let's go out to our investor database and see if we can find somebody that has £100,000 that wouldn't mind putting it in for a set return, which means that you get access to that profit margin at the end. You've got to spend some of it on this paying back the interest for this £100,000 that you've borrowed from the investor, but essentially it means that the deal still gets done. The deal gets done. You continue to build your pot or make your pot even larger and then move on to the next deal. And on the next deal, you wouldn't have to put that in from an investor because you'd have generated that from the pot that you've just made from your previous deal. So it's all about continued growth, continued improvement. Oh, same slide. This is an example of Nadia. Nadia did an assisted sale in London. So this is one of the sort of more creative strategies that we teach people about. This was a property that she found. It wasn't on the market. It was through a friend of a friend that she found this property, and she basically took control of this property, didn't buy it, took control of the property, did the refurbishment work on the property, and then sold the property at the back end and made that capital uplift between the value that it was when she first started and the value that it sold for. And she used none of her own money to do that. She found an investor to do that, to put the money in, and she did it on a JV basis with that investor. So that kind of creative strategy, a lot of people have no idea how to put that together. That's covered in a tenth of one of our training courses, the assisted sales strategy and how that works. This is Shahid. He's been part of Source since November 2019. He sells, he trades deals on. That's exactly what he does. You know, he doesn't have any developments. He doesn't have any flips or anything like that. He just trades deals on, and he is incredibly successful at doing that, and sells a huge number of deals from one month to the next, to the point where he used to do it on his own. Then he brought his son into the business, and now he has 2 staff that are in the business, and they sell a huge number of these deals month in, month out, 3, 4, 5, 6,000 pounds per deal. And he's been doing that for quite a long time. So he's been very successful just at staying at step 1. You know, we looked at step 1, and I wouldn't be surprised if he was somewhere near making that 200,000 pounds per annum just by staying at step 1 and trading deals on. And this is Chris Richardson. So to give you an example of a franchisee that has done that and gone straight to stage 3 or step 3 instead of building up from 1, 2, and 3. This is a project that is in Bournemouth, Exchequer Grange, this is called. And this sort of, it's hard to see how big that building is, but it is actually quite big. It used to be an office building, and he converted that into 14 flats. And those 14 flats have been sold, and he's made a very decent amount of money from taking care of that project, which we helped him out with. Now, that deal, and the reason that he went on to that deal, when he first came on board with us and he filled out that white document, his cash flow was already taken care of. He was getting his cash flow from another source, so he didn't need to work on his cash flow in order to move up to the next stage. He had that pot of money sitting there, and therefore he was able to get into that bigger deal straight away. And this is Everton. So Everton used to be in recruitment, and he left recruitment in order to come into Sourced full time. And in his first couple of months with Sourced, he not only secured this serviced accommodation, rent-to-rent service accommodation unit, but he also traded on his first 3 deals within the first couple of months of coming on board full time with Sourced. Again, following that process, building it up, and then getting to the point where he can put his own money into a bigger project. Now, I mentioned the training a couple of times, and we've got a fair number of training courses that all of our franchisees have unlimited access to. These guys can jump onto that training course for, let's say, funding and investors as many times as they want to. It's not just a case where they can come onto that course once and then they have no access to it again. They can come onto that course as many times as they want to. And the same with all of the other ones. It's completely down to them how much they want to be educated. And actually, there's only 8 on here. We've got a lettings course, and we've got an accountancy and tax course as well that we run, which we've only just started running, which are, again, available to the franchisees. And what they do is they will book onto using this image that you can see right here. This is a yearly plan of all the training courses, and they can just click on that link there, and it will take them through to the training system, and then they can just put their name down and they're booked onto the training course. And as you can see, we've got events every single month. Over 70 training days per year. I actually think we've got 105 training days per annum now. and it's comprehensive and completely open to how many times they want to jump onto it. Just going to go back to the previous slide to make sure that I covered everything in there. Okay, yeah. And then as well as the training events, we have support days. So the support days are for no more than 5 people at a time. So 5 franchisees and 1 support person. And the whole premise of the support days is that it's done in a mastermind format, in that each person sits at the front and talks about themselves and their business, the things that they found difficult, the things that they've done really well, talks about their entire business for an hour. And people will ask them different questions about the business and how it's going and what their plans are and so on and so forth. And basically you get to learn from everybody else in the room while you're talking about your business, but also while you're sitting at the back, you get to learn from other people and the mistakes and the benefits and the improvements and the successes that they've had as well. Very, very, very powerful process with those support days. So you can actually see the see this training schedule if you go to that link right there. So we've opened that up to you so you can see all of the training days. And like I say, that is actually an image with the new training dates added, because I can see these darker orange ones are the accountancy courses. So we run one course, we'll run 3 times a year to make sure that everybody has access to it. So we're a national brand. When you join us, you get access to 40,000 households. You get a huge amount of training to help you not only discover what your niche is, where you should be focusing on in property, but also to help you achieve that and implement that. It's a proven business model that we have lots of people part of that business model who are making a success of it right now. And you get exposure to investors, not only in property leads, but also investor leads that we generate for you. So that overall package is only £12,500 plus VAT. Now, in comparison to other packages in the marketplace, which only offer the training, that is an incredibly competitive price. Ongoing, you get the property leads and the investor leads, you get the email and video and phone support and the support days and the support events that the support team put on, national brand marketing, bi-monthly support days, access to the peer-to-peer platform. So not only will we help you find the deal, support you through that decision-making process, but also we can help you fund that deal, monthly training events, SIN management. If you want to host a networking event, we will help you host that networking event. And then a huge amount of legal documents, contracts, all that kind of stuff. And the ongoing price for that is £200 per month. And then when you make money, we would ask for 5% of your net profit. And the point of that is that we could have put that money onto the monthly fee, but what we wanted to do was keep the monthly fee as low as possible, to keep your operating costs as low as possible. And then when you make that profit, we ask for 5% of it, because at that point, you've already made a profit, which is the point. So with the support days, unlimited deal review. You know what? I actually saw a website the other day who was from somebody who is fairly well known in property, but not a big hitter really. But they were offering to review a deal for somebody, or for anybody. Anybody can send me a deal and I'll review it for them. And it was £499 just to review a deal. Now, when I think about the amount of deals that we get sent on in a week from our franchisees, upwards of 279 deals, I think, is the most we've had in one week from our franchisees. You times that by 500 quid, you're making an awful lot of money. But that's the sort of numbers that we're generating from our franchise network in deals that we're assessing for them week in, week out. And some of those deals will have been found by the franchisees, and some of those deals will come from the leads that we've provided for them. So you've got unlimited deal review. You've got that ongoing support, because if you send a deal through to one of the support team, they're not only going to assess that deal, but they're also going to feed back to you and educate you on the ways that deal could have been better, or in the ways that deal is excellent and is approved to go through to funding. You get your dedicated support person or account manager, and then you get optional, completely up to you, one-to-one visits. So if you need one-to-one visits, your support person will do that. If you need help in a more personal way, your support person will do that. If you need help from a Zoom point of view, or from just a pep talk once a week, or from an accountability point of view, your support person is there to do exactly that with you. And then we get discounts on lots of different things that we as a franchise have access to. So thank you very much for your time. I can see that I've got quite a few questions, so I'm going to work through them in just a second. If you email franchise@source.co, that will go through to Sam. So for all of you guys that said that you were interested in having a phone call with Sam, please use that email address right there, franchise@source.co, and write an email, and Sam will pick that up and he can arrange a call with you to answer your questions, to take this further, to do whatever is necessary. So without further ado, let me jump onto the chat. Are you able to fund a deal which is on the auction to purchase it? So at the moment, we are not approving deals that are in auction. However, this is the way that we operate. We're always looking at the benefits and we're always looking at the positives. So if it's in the auction, the terms of the auction are too restrictive, because in an auction, you need to leave a 10% deposit right there and then. And as soon as that hammer comes down, that's a legal exchange of contracts with a 28-day completion in most cases. Now that's too restrictive and punitive. So what we say is, instead of waiting for the auction, go and make an offer before the auction, or keep an eye on it and make an offer after the auction. Because if you make an offer before or after the auction, the terms of that exchange contract are much more flexible. So you can negotiate a longer period of time, which means it's open. It's open and it's a more appealing proposition for Source Capital. Because the issue that you have with a 28-day completion is that you've got to do all of your legals within that 28 days. Now, what happens if the legals haven't come through at day 28? Then, Source Capital are there waiting to fund it, but the legals haven't passed. So Source Capital can't fund it because they haven't secured that first charge. So with purchasing from auction, it needs to be done either before or after the auction, because the terms of the auction in itself are too punitive. Apologies if that's gone over anybody's head, but that is the answer to the question. So I'm not going to hold back. If any of you guys put in questions in the chat box, can you please put them in the Q&A box instead, because I'm probably going to lose them because I've got so much to get through here. Okay, so can we set up our own limited companies for trading and holding properties, or do we have to use the source company? No, you set up your own limited companies. You can hold your franchise within your own limited company. That isn't a problem at all. Can you share some case studies, please? That's exactly what I did at the end. I hope that's an adequate number. If you want more case studies, you can head over to Source Capital, the Source Capital side of our website, and you can have a look in Source Capital, because they're all franchisees projects, all of them. So you've got more case studies in there. Roughly how many franchisees do you have at present, and how many opportunities are released to them each month? Oh, that's a good question. So franchisees that we have at present, we're roughly on about 140. Opportunities released to them each month. Let me just have a quick think, because that is a statistic that I know. We've got 2,000 properties coming from from one lead source, about 300 from another lead source, and about another 1,500 from another lead source. So we've got about 3,700 property opportunities every month. And the number of investor every week. That's every week, not every month. So 3,700 every week. The number of investor opportunities depends on the number of property opportunities advertised out to them. So the number of investor opportunities is much more within the franchisee's control. Working off last week's figures, for every property that was marketed out to our investor database, we generated just under 20 investor leads for each property. So extrapolate that out and work out how that fits with the plan that you have. But that they're from the top of my head, the most accurate and the most up-to-date numbers that we have for both of those categories. Good question, Jeff. Cost of the franchise, I think I've dealt with that one. Just joined, do you have access to investor database to sell deals as a franchise sourcer? Yes, absolutely we do. We've got an investor database of 130,000 people. If you just joined and that's when you asked your question, you will be sent the recording. Can you work full-time and manage property business to meet your 12 months targets? What we request, good question. What we request is that you are able to spend 2 days per week in the business. So if you have 2 days free per week, you can absolutely make this work. If you do not have 2 days, 2 days free per week, then it's going to become more of a struggle. How often would I be able to attend a support day in the first year? Every single support day that goes on. There is no limitation to anything, Jeff. Are you able to fund a deal which is on auction? I've answered that one as well. Is the webinar available in recording? Yes, it is. These are fairly easy questions. Is it like a good mix of very easy questions and very, 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 very complicated good questions? If I invest 25 grand, what is the cash flow that I can expect monthly? That's not a question that I'm going to be able to answer. It needs to, I could very, very easily fill you full of hot air there and just tell you some fantastical numbers. But that isn't the way that we operate, and that is not what we're about. So we need more information, and we need to have a better idea as to what your plan is and what you're looking for, what your level of experience is, where you are, where you want to invest, what you're open to, what your strategies and structured knowledge is like. We need more information from that. What proportion of franchisees are registered for VAT? That is a great question, Alistair. I have absolutely no idea. We don't have a restriction on whether our franchisees are or we don't have transparency, should I say, on whether the franchisees are registered for VAT. So I don't know. I couldn't answer that question. I'm sorry. I'm not going to make it up. I genuinely don't know the answer. And that one's that one. Typically, how many hours do I need to spend on packaging each lead in order to make it presentable to investors? All right. So that's a great question. So if I was doing this myself, the amount of time that I would spend on packaging a deal would be, and let's assume that this is for a property that is fairly close by to me. So I don't need to, there's not a lot of driving time. So including going to view the property, because a lot of estate agents won't let you put in an offer on a property until you've viewed the property. Including viewing the property, I'd say no more than an hour and a half or so. An hour and a half per deal to then get it sent out. And then that's how long you'd spend packaging it. You'd then spend maybe another couple of hours on conversations with people, and then you'd be able to sell it on. So it's not a huge amount of time. You just need to make sure that you're being efficient and that you are using your time well. That's that one done. I run a construction company and have a solid background and resources to do the work. Does it help to fund the lead that you might have on books? I don't understand the second part of that question, Greg. Sorry. Does it help to fund the lead that you might have on the books? So look, from a source capital point of view, that you've got a construction company and you've got experience in construction, that absolutely helps to get your project funded. So absolutely 100% from a source capital point of view. We give all the franchisees a similar number of leads. It's distributed on a geographical basis. But in terms of getting your deal funded through source capital, because you've got a provable construction background, that will absolutely 100% help you. I hope that answers your question. I'm sorry, I just don't quite get that second sentence. Let's jump in here. Okay, that's been done. So right now, I don't have any further questions in my little thing. What's the minimum capital aside from the franchise fees that I need to get involved? Good question, Robert. What's the minimum capital aside from the franchise fees that I need to get involved? You don't have a minimum capital that you need. What we would do is we would work your minimum capital, or the amount of capital that you had, into your plan. So if you're coming on board and you've got no capital and you want to do, I want to build 50 new build houses, then we're going to look at your 12-month plan, and we're going to say, let's be honest, that doesn't work. That doesn't work because you're going to need capital. You're going to need to pay for quantity surveyors and all kinds of surveys to purchase the property, and you're going to need a lot more money than zero in order to get these kind of projects funded. Therefore, what we need to work on is we need to work on building your pot to get to the bigger projects. So again, we're not here to blow hot air. I'm not going to say where we're going to blow the hot air, but we're not here to fill you full of hot air, should I say. We're here to increase your probability, to increase your efficiency, and to make sure that you can get to the place that you want to be in a realistic time frame. Greg, thanks for letting me know. How how do you go about choosing the most suitable area? That's, well, geographically, that's based on where you currently are to start off with. But then after that, it's a conversation that you will have with Sam. Is 50K feasible? Yeah, look, Robert, we've got people that do it with zero capital to start off with. To be completely honest with you. And they're being patient and they're building their pot and they're getting into bigger deals. If you've got £50,000 already sitting there, is it feasible? Absolutely, because people have done it with less. So yes, 100% that is possible, and with our help, probable. I can see that I've got no other questions or chat at the moment, so we got through some of those questions fairly promptly, but I hope I answered them very well. So if you've got any other questions, jump on now, let me know. Otherwise, we'll jump off and go from there. That's great to know. I'll work out how to get involved. Okay, Robert. Yeah, thanks for confirming. Thanks for letting me know. Appreciate it. Can I become partner being limited company? Yeah, absolutely. Yeah, it's fine with a limited company. I'd say the majority of our franchisees are limited companies, and that's how they buy their franchise. So yeah, absolutely fine within a limited company. Thank you for letting me know, Rudy. Oh, one more. Is it better to come in as an investor if I have capital, or actually join as a franchisee? Good question, Robert. Richard, sorry. I can't answer that question. I can't answer that question because I need to know more about you. I need to know more about you. I need to know more about the time that you want to put into it, and I also need to know more about the kind of returns that you're expecting. Because if you've got capital and you're expecting a 10%, 12%, 15% return, then just be an investor, because that's easier for you. But if you're coming in with capital and you're expecting a return of 100, 200, 300%, then come in as somebody that's actually doing the property deals, because that's where you'll access return on capital on those bigger numbers rather than the smaller numbers. If you take control and you do the projects yourself, you've got access to higher returns. So it completely depends on what you're trying to achieve and how much time you have in which to achieve it. Alistair, you're welcome. Thank you very much for letting me know. I can feel my voice is going now. An hour of straight talking. So yeah, if anybody's got any other questions, you've got franchise@source.co right down here where you can jump on and let us know. Thanks for letting me know, Jeff. Great. I'll follow that up with Sam. Oh, that's a good question. I'm definitely going to answer that. Alistair, on the peer-to-peer funding option, how many funders fail to get return? So there's two questions here, and this could be taken in two different ways. So first of all, how many franchisees don't get funding once they've gone through the process? If the deal is right for Source Capital, we haven't turned down a franchisee at all, so they will get funding. What we might say to the franchisee is this deal is too risky for our investors, so we need to find that additional £100,000 or so, and that can either come from you, Mr. Franchisee, or it can come from an investor that comes into the deal with you. So that's the first thing. We don't turn away our franchisees. We just show them a way in which deal will work. From the investor's point of view, so from the public that are putting their money into the deal, the repayment rate that we have through Source Capital is 100%. So everybody that's put their money into a deal has got their money back and they've got their interest back. So that's where we are from both sides of that spectrum. The questions just keep on coming at the moment. Thanks. You're welcome, Nick. Thank you for letting me know that you appreciate it. Are there other expenses a franchise has to pay while selling a deal, like having to pay for valuations, etc. per deal? If you're just trading a deal on, I would not have any expenses at all, apart from maybe fuel and mobile phone bill. Genuinely, I wouldn't. I wouldn't. I looked at a deal yesterday, right? I know this area. I've sold a deal in that area before, and I really like the area. I think it's just a great investment opportunity, I think, right now. And I drove up there, which is it's quite a long way away from where I live, but I've sold that deal already to, well, I haven't sold it because I'm not going to take any money for it, but I've given that deal to somebody that I know who is going to buy that deal, and all I had to do was look at it. All I had to do was look at it. That was it, and then have the conversation with that person. and put the numbers together and show them the evidence. That was it. There's no expenses. There shouldn't be any expenses when you're trading on it. If the person that's buying it wants to employ a surveyor, then that comes at their cost. You're welcome, Robert. Thank you very much for letting me know. Okay, any other questions? We had a flurry quickly of questions there. Anything else before I go? Okay, I'm going to head off. franchise@source.co, please, if you have any further questions or if you would like to get in touch with Sam. But otherwise, really appreciate your time. Thank you for spending Wednesday afternoon with me, or if you're watching the recording, probably Wednesday night or Thursday night with me. But thank you very much, and hopefully I'll speak to you soon. Cheers. Bye-bye.